This is Super Investors and the Art of Worldly Wisdom. I'm Jesse Felder.
Object to the test!
Super Investors is brought to you by the Felder Report. Every week, I go through a ton of reading and research, and on Saturday mornings, I send out an email, which is the culmination of all that reading and research. It's basically just the 5 things I found during the week that were most interesting or valuable. It can be a chart, it could be an article. If you're interested in receiving something like that, just go to thefelderreport.com. Right there on the home page, click Join Now, and you'll be good to go. There are very few truly unique thinkers in the world, and almost none of them regularly train their gaze on Wall Street. Peter Atwater is one of those few. Whenever a major news story hits the tape, it's Peter's opinion I look to begin to understand what it means for markets and the world because of the grounded and clear-headed insight he brings to the table. 3 years ago on this show, he accurately forecasted the current backlash era we now find ourselves in. In this episode, he discusses where we stand in this process today. Peter also postulates how companies and markets might fare against the coming age of scrutiny. So without further ado, please enjoy my conversation with Peter Atwater.
You ever wonder why fund managers can't beat the S&P 500? Because they're sheep. And sheep get slaughtered.
Peter, welcome back to the show.
Thanks so much, Jesse.
You know, we were just talking before we started recording. I can't believe it's been 3 years, since I've had you on. I've thought many times that it would be really fun to do a weekly show if I had the time, just to talk about a lot of the different things that are going on in the markets. And, part of my reason for thinking that was I would love to be able to pick your brain on a weekly basis to find out what your evolving opinions as to what's going on with everything around, because you're one of the people who I just think you have a unique perspective and it's uniquely valuable.
Thank you.
Well, before we really get, I guess, into this, I have to say thank you, first of all, for you. You and Tom McClellan have kind of had a back and forth with the dad jokes on Twitter, which has really added a nice light to some darkness. It's been a dark time, and there's been some, Twitter is typically filled with trolling and things, and lately it seems a little louder than normal. So thank you to you and Tom for for the dad jokes. It's been a nice relief. But to get into what I really wanted to invite you to talk about, you seem to appreciate the power of narrative, how it relates to how we feel as a society, or it relates how we feel as a society, and understand how that evolves better than anyone else I know. 2 questions. First, how do you go about tracking this stuff? And second, how do you start putting some of the stuff you're reading and finding into a sort of context to create an understanding of how social mood is evolving?
So one of the great opportunities today is that we have all of this social media that enables us to see what narratives are popular. And so much of it is just a function of watching and reading headlines and reading tweet after tweet to get a sense as to where the crowd is in terms of its stories. And we don't learn via fact; we only learn via story. And so I find these narratives extremely helpful in what they say about us and how we feel at any given time. I don't think stories change us as much as they reflect us. So I look at so much as a changing mirror that is out in front of us.
And you're one of the only people who I think you're the only socioeconomics enthusiast that I've really come across. But why do you think? And you, through your writing, it's obvious to start to see how this stuff is really powerful in understanding society and thus understanding politics and the markets and the economy and tons of other things. Why do you think socioeconomics is so underappreciated as a discipline?
Because I think we, as human beings, believe that causality is something that we control. We don't like the idea that events are random, that things are out of our control. And so socionomics tends to, I think, force people to acknowledge that there's other things at work besides our own, what we think is our own deliberate action. And little of what we do is deliberate. It's so often in response to things that are happening around us. And so to me, it's just trying to look horizontally across the landscape and seeing things in culture, in politics, in business, and trying to weave those together, because that's where the real signs are. The market is simply trying to monetize those signs, but I don't think the market itself really, it's a barometer.
And it reflects, just like I think you tweeted a ton or write a ton, the media reflects mood. The markets also reflect mood. And these things are, in a lot of respects, I think they're reflexive kind of in the Soros aspect, right? The mood, the markets can make us, feel, I guess this is, part of the Fed's trying to create a wealth effect and, let's boost the market to make people spend more. But I think one thing that socionomics, I guess, recognizes is that social mood is much more difficult to change than simply, creating a new policy, having a new president, whether the market's in a bull market or bear market. Social mood is kind of its independent thing that's more of directing these things than being directed by it.
Yeah, so socionomics would say that the selection of the president is a consequence, not a contributing factor. So it looks at the world in reverse, and I find that really helpful. It's hard. It really goes against the natural inclinations, but it's really helpful to step back and to say, so what was it that the election meant in terms of our mood? And those sorts of reflections, I think, are where you find really valuable information.
And I think that's such an important point, because so many people are looking at, and I guess we saw it in the markets last week during the election. We're recording here on Monday, November 9th. And, so many people were trying to scramble to create a narrative surrounding, what the markets were doing and what was going on with the election. And I think it really does help. It's a great point that you make to look at these things in terms of social mood, as they're not necessarily they're symptoms. They're symptoms of a larger issue.
Yeah, and those symptoms, when they manifest, particularly at extremes, are really helpful. It's being able to look at massive call buying in Tesla and being able to say, that's telling us, that action itself is telling us a lot about how investors feel.
Well, let's that's a fast, perfect transition. I wanted to, last time we talked, I titled the podcast "Welcome to the Backlash Era," because that was something you were writing about. And looking back, I mean, like I said, I couldn't believe it's been 3 years, but so much has actually happened since we talked that really that turned out to be a very prescient call. I think back then we were talking about the Me Too movement and how that might grow into, something much bigger. And now that we've seen, the protests over the last year from all different types of groups, I think it's fascinating to see that the backlash era has certainly evolved. Where do you see us in that process today?
So I see backlash just continuing to expand. When we don't have confidence, there are 4 natural responses: fight, flight, freeze, or follow. And so, to me, the backlash movement is itself an expression of feelings of powerlessness. And what we've seen with the Me Too movement is that, those that were overconfident have easily fallen to this manifestation of weak social mood, where women have risen sort of from the ashes. And that sense of powerlessness is what motivates us. That's what always takes us to the streets. And I think we saw that earlier this summer with the George Floyd protests. And I think they were an expression of much greater powerlessness than people realized. And I think we're really seeing that in a different way with the relief that's manifesting as a result of the Biden election. There's this wide sense of relief among Democrats. But what is yet to play out, to me, is what does the election of Joe Biden mean in terms of backlash now coming from the right? Does it manifest? Do those that have lost in this election go gracefully? I don't know the answer to that, but I think that manifestation or not will be a really, really important indicator of social mood, because that'll tell us that we're finding common ground if it doesn't happen, that we are inherently more centrist today than we've been. On the other hand, if we see mounting backlash, not only from the far right, but from the far left to Joe Biden, the centrist, that's going to tell us a lot about where people really feel across the political spectrum. So I don't think the backlash era is behind us. I'm just waiting to see, I would love to think that it is, but I feel like we need the passage of time to confirm that or not.
Yeah, and to me, one of the most, I guess, important things I wanted to ask you about is in terms of this backlash era. I remember when we talked about this 3 years ago, I was kind of framing it, looking at it in terms of, a unified anti-elitist movement. And I guess where it hasn't lived up to my expectation, it's kind of differed from what I expected. Was we've seen more of this kind of devolvement into the divisiveness, the tribalism, and almost it seems like an infighting among the less privileged. You've argued that this I guess the disparity between up versus down, the K-shaped recovery, which you've helped to popularize, is even bigger than this left versus right. So. I guess, how do you see that evolving? I mean, there's clearly, very stark contrast and, serious. I guess it's not even really a debate. I mean, I live here in Oregon, and in Portland, we see, in even small towns, all through the summer, we saw, either Antifa, show up, or threats of Antifa showing up at rallies, and then, types, Proud Boy types of people showing up in very small towns. And so there's a very divisive left versus right. I guess that's something I didn't see that kind of divisiveness develop as far as through this backlash type of movement. Do you think we're going to see more of this divisiveness, or do you think it will eventually evolve into a more of a unified anti-elitist movement?
I think initially we're likely to see more left-right, but I think that on a local basis, you're going to start to see individuals recognize that those on the far left and far right have a lot more in common than they have that's different. They may want the outcome to manifest differently, but what both ends of the political spectrum are saying today is, I don't feel certain and I don't feel powerful. I feel unheard. I feel unwelcome. And so I think that as conditions evolve, there's a real risk that there is someone out there who could powerfully unify them, to suggest that the real issues are wealth related, they're education related, and those are bipartisan challenges.
And that's, it seems like that's probably very likely. I think it's a really great point that, the grievances on both sides are actually probably more similar than they are different. And so, it does seem like there's an opportunity there for some type of populist politician to rise and really speak to that. I want to transition a little bit to one of the other themes that you've written about a fair amount over the last few years is really the age of illusion, and I think the quote that I pulled from something you wrote, which I think does a great job of encapsulating this, is the past decade has been a gold rush in fakery. And I think that's just a very interesting way to kind of frame what we've seen through this whole market since 2009-10.
Yeah, I think that, coming out of 2009, there was this immense hopelessness, and that was, across the board. And what you started to see were individuals who sought to capitalize on it. Whether they were celebrities, business leaders, political leaders, there was this sense of magic. I was fascinated by the whole blitzscaling mantra out of Silicon Valley, for example, and the thought that you could grow anything to enormous scale, and move fast and break things. That mindset, very charismatic leaders who were powerful and come right out of the cultural bandwagon of P.T. Barnum and Harold Hill from The Music Man. Both of those individuals, both in reality and in fiction, they thrived in environments of low confidence. As I said earlier, one of the responses I think we really don't appreciate enough is that the aspect that fight, flight, freeze, and follow. We are so inclined to follow someone who provides a hopeful story when confidence is low. And I think with that, we have these fabulous platforms to do it. Instagram, Facebook, TikTok, Twitter, where illusion, creating appearances is easy and is almost magically seductive. And what you've seen is this rise in celebrity culture where popularity is based on popularity. There's skills are far less important than notoriety. And that's kind of what we've seen is this massive popularity contest of celebrities. And the challenge is there's very little behind it. It's very hollow, but it is the age of illusion.
I think that's the perfect way to frame it. I love that you parallel. First explain, how the environment was ripe for these people to kind of step in. But I also love how you parallel, right? In business, we've had these visionaries, who've kind of, whether it's, Elizabeth Holmes, Adam Newman, Elon Musk, who've come in and basically just dazzled people with their view of the future. But that's been paralleled in, I think the quote that stuck with me from one of your writings was the retail version of the age of illusion was influencers.
Mm-hmm.
You have all these Instagram influencers and these people have literally been making, a living, in a lot of cases, a really attractive living by being a quote influencer. And so that is, a clear reflection of social mood and people's desire to have somebody to kind of, get through that time. You've also written now that we're starting to see, and I guess with the fall of Elizabeth Holmes and Theranos and Adam Newman and WeWork, we're kind of seeing the end of the age of illusion. Although a lot of these illusionists still, seem like they're able to keep up the illusion for now. But we're transitioning towards an age of scrutiny. And you spell that SCREW, Tiny. Every time I try to type that, the autocorrect fixes it. But what is this age of scrutiny? What does this look like? And why are we now headed for something like that?
Yeah. So when I use the term scrutiny spelled peculiarly, like the screw, confidence, when confidence falls, we naturally scrutinize more. Falling confidence forces us to focus because things seem uncertain, and that lack of clarity demands that we really pay attention more. But what's so different, I think, about what we're experiencing now is there's a lot of anger and betrayal that the frauds were so extreme and so widespread that as we're seeing institutions and individuals fall, people are pissed. A lot of money's been lost. There's just this mounting sense of anger, and I think that the trend is accelerating. I thought Jeffrey Epstein's downfall was significant, given all of the tentacles politically, in business, culturally. Adam Newman, who you mentioned with WeWork, and now we have, Wirecard in Germany, which was an extraordinary deceit. And so I think that all of this illusion is now collapsing on itself. And I think what people fail to appreciate with illusion and with magic acts is that they require momentum. They require that you move from, the two-headed lady to the five-headed lady to the 15-headed lady. There has to be the next act has to be enormous to capture the crowd. And so it's that audaciousness that when it collapses, that's what's exposed more than anything. It's that it's not just a small fraud; it's a massive one. And with all the capital that's gone into the investment market and this recovery, the financial losses are going to be staggering. It's just so hollow.
Well, yeah, and I think that's one thing that's been really surprising to me. I think it's Manias, Panics, and Crashes, great book on bubbles and whatnot, where they note that a lot of stock market crashes or major bear markets are precipitated by the uncovering of a fraud. And it's been surprising to me, I guess, with, all of these, Wirecard and Luckin Coffee and Theranos. And, it seems like we've had one in almost every area, every market that you can think of. And the stock market generally has been seemingly impervious. How do you think about that?
I think that people are still viewing these as one-off events, which to me speaks to the fact that we haven't seen the turn yet. I think that I thought, Adam Newman was the beginning of the end. But I think part of it is that for so many, if this fraud is true, it introduces existential risk. That to believe that there is more than what's been exposed already generates a level of doubt that it is too big to accept. And we're like that when we're highly confident. If this is wrong, then my God, everything else is wrong too. So we'll avoid those kinds of decisions, that kind of thinking, until we're forced into reality. And in some ways, I think Germany is dealing with that right now in the aftermath of Wirecard. That it's just truly too big to overlook.
And it was, and it had the illusionists there had their tentacles deeply into the government and things, and so it's much more difficult for I think Germans to dismiss.
I think go ahead.
I was just going to say, we haven't had anything yet like, if you think in the .com bust, we had WorldCom and Enron come to light during that bear market, and those really shook people's faith in the markets and in companies to be what they say they are.
Yeah, and I don't think we've heard the last out of the payments space. That environment. If we go back to 2009, nobody wanted to invest in banks. So if you wanted to be exposed to financial services, you went into Visa, MasterCard, and all of the payment companies. And so I think that the payments space more broadly was an environment that is just exceptionally ripe for fraud. So it concerns me when I see that Ant Financial is being constrained by the regulators, because that too suggests a level of hubris, of overconfidence that needs to be corralled.
And it seems like China has decided to do something in that regard. Before it's one of those things. It seems like we have to nip it in the bud, because the longer this goes without us doing something about it, the bigger the problem will get down the road. But there are a lot of these kind of, I guess, illusionist types of policies and things we've seen in business. Obviously, for influencers, the age of scrutiny is going to mean that they're going to need to find a different way to make a living, probably, I would assume. But in terms of business and the markets, a lot of these illusionist types of policies, surrounding buybacks and financial engineering and offshoring, just-in-time business models. You mentioned blitz scaling, move fast and break things. What does the age of scrutiny kind of, I guess, mean for business in terms of these types of illusionist tricks?
So I look at the pendulum swinging back in a broad theme of, the just-in-case economy. That if illusion was highly profitable, that this idea that you didn't need assets, this massive redeploying of capital, what you're going to want on the other side, what society is going to demand, are things that are very tangible. They're going to want to know that there are things in the warehouse. In fact, not just things, but potentially more things than you might need. We're going to be very sensitive to shortages and scarcity. And so I think about it almost having a very parallel life to what we saw with the mortgage space and Countrywide, where, Countrywide was at its core an exceptionally hollow organization. And it was inherently fragile when the music stopped. And so society responds by demanding that the banks have more capital, that the banks have, more high quality assets, that lending be constrained moving forward. And I expect that we'll see very much the same for big businesses overall. And I think that whether directly or indirectly, the shareholder is going to pay an enormous price in this process, as businesses are forced to deleverage, have more capital on hand, be less risk taking, grow more slowly. There are a lot of sort of reverse levers that will get pulled. And as I said, I think the mortgage space is a perfect metaphor for what's ahead.
Well, it's interesting to me that you're focused on finance, because I can apply this to so many other different sectors. But can you expand on that, on mortgage finance and how you think that obviously they're doing phenomenally well right now. We've seen, I think, how many IPOs in the mortgage origination and servicing sector. It's been, obviously they look at it, the insiders there, as, let's make hay while the sun's shining. How does the age of scrutiny apply to them specifically?
Well, I think it's safe to say that the mortgage companies that are doing well today are not the mortgage companies that were doing extraordinarily well in 2005. So that the system pushed risk, a vast amount of risk taking out of the financial services industry as we knew it 15 years ago. And I think that we were very fortunate in that capital went into the housing market at the lows, and that you saw new entrants go in. But I think those entrants are now at a similar peak as the old entrants were 15 years ago, that the incumbents were. And so this cycle has made many incredibly wealthy. But I think that if we see the pullback in housing that I expect, the hollowness of today's successful businesses is going to be exposed just like it was 15 years ago. And one of the things that I don't truly think folks appreciate is how much risk in this cycle has been taken outside of the Federal Reserve System. This is a non-bank gold rush. Whether you're an asset manager, a for-profit lender, I just don't think we appreciate that the banks are far better off than their non-bank brethren as we stand here today.
Well, it's fascinating to me to see you make a great point that these are non-banks that are really the ones doing well in mortgage finance. I think of Rocket Mortgage, and I think of companies like SoFi. These kind of the financial innovators, but at the same time, you notice banks are not lending anywhere as eager to lend in any way that's close to what these non-banks are willing to do. And it reminds me of investors, coming into their first cycle, and they're super eager to throw money at anything. Whereas investors who have been through several cycles, AKA the banks, kind of look and say, hey, now's not a great time to be lending a ton of money. And so, I think it's pretty easy to see that there's a real dichotomy there between experience and inexperience. And also, to me, I think one of the things that I find most common, maybe the most common thing on Wall Street, is this idea of business models that are literally built on make hay while the sun's shining. We don't care if we blow up a year or 2 or 3 years from now, as long as we make as much money as we possibly can today. But this has also been one of the attitudes of companies in Wall Street generally over the last several years. We've been talking about it in terms of finance, but I think another way that a lot of companies, I've been surprised at how many blue chip companies have used, debt finance buybacks to boost their stock prices over the last 10 years. Do you see this age of scrutiny targeting buybacks specifically?
Absolutely. Yeah, I think that, the financial levers, the financialization of corporate balance sheets. I mean, corporate balance sheets were really the last balance sheet left to trash. And I think Wall Street did a fabulous job of that, of just gutting businesses. And to some extent, Jesse, we're seeing that, the early casualties of this, over leveraged asset light business model unfolding in the restaurant space, in the retail space, where businesses that were owned by private equity are shutting the doors or declaring bankruptcy almost eagerly. And one of the behavioral trends that I'm watching very closely is bankruptcy, because today it's shameless. You can file for bankruptcy as a CEO, and nobody's going to blame you. You can look and say, oh, it was COVID did this. The fact that you had over leveraged, were underprepared. I think of that particularly in the context of the airlines. Nobody is holding over aggressive managers' feet to the fire to say, hey, you weren't prepared. And one of the consequences of that, I think, is businesses will increasingly use bankruptcy as a competitive advantage, that it enables business leaders to renegotiate. We're seeing this first in retail itself. The next wave will be commercial real estate. But if we keep moving up the food chain, then we get into some interesting issues like states. If tax revenue from real estate is collapsing, the pressure on states to file for bankruptcy is going to intensify.
Well, that might be one of the, a lot of people have proposed this is, with the amount of debt that we've seen taken on at all levels, corporate, state, federal levels over the last 40 years, as a byproduct of interest rates falling and, very loose monetary policy, there's only, so many ways to get through those debt issues. And that's very interesting to me to think, people have, proposed debt jubilees is going to be one way that we'll see. But it'd be interesting to see that companies decide, okay, in order to compete with so-and-so who went bankrupt, we're going to have to do the same thing because they've renegotiated all their debt. And so now they're in a competitive advantage to us. How do you, I guess, think about it? The other point too, and I'm really glad you brought up private equity, because talk about illusionists, right? I think probably they're some of the most successful illusionists over the last 10 years, and public companies have kind of taken on that private equity model of let's use debt to pay off equity shareholders. I want to try and bring this around though to another sector. To me, one of if you think about which sector is benefited the most from all this illusion, we talked about social media and influencers. And the companies that have provided the platforms for those influencers can be seen in some ways to be illusionists themselves. What are your thoughts about big tech as illusionists that might be facing some scrutiny going forward?
So, we're already seeing bipartisan support to rein them in. It's the one thing in Washington that you can get Republicans and Democrats on the same side of the table. And it is about power. They have become too powerful. Forget the issue of profits. It's all about power. And so I think that what you're likely to see is that as realism takes charge over illusion, the platforms that exist today are going to really struggle. They're going to become easy targets. And remember that networks are only as effective as the confidence in those networks. There's again reflexivity in networks, and so I think that the danger is that some of these networks become the next MySpace, and that we move away from them. You're already seeing sort of the balkanization of Twitter as people move further and further into their own private networks. You sort of see that in Reddit with one subreddit after another, and so that the networks themselves become challenging, and there's a sort of an over proliferation of them. So I think there's a shakeout that's coming in that space, but I think it's important to look at it as part of this bigger ending crescendo of the age of illusion, and that's media is such a cool indicator of peaks in broader confidence. Radio, television, heck, Morse code. We can even go back that far, but those are all indicators of extreme peaks in sentiment. And I think social media, with hindsight, financial historians are going to look at that and see the same thing, that it was part of a bigger platform.
And I think we are seeing it, like you said, in terms of you track Google Trends very closely. And to me, that's a fascinating, another real-time kind of example of social mood in a lot of these things. And I think you noted recently that influencers peaked a while ago. And then I think it was last week or the week before, we saw, Kim Kardashian tweet that she took her family to a private island for them to try and get together and get through these difficult times. And it's just such a tone deaf, type of thing when people are truly suffering in ways that she can't imagine. There was a backlash against that. And so I think we're, potentially seeing it there, but I'm also curious to understand your thoughts, if you have any, about the actual business models of a lot of these companies. I mean, many of them are built on advertising, and advertisers spend X amount on the belief that their dollars are being spent, they're getting a good return on their investment. There have been some, stories. I haven't gotten a ton of notice, but they're from insiders in the industry that have suggested that the whole online advertising platform itself is a form of illusion. That's making advertisers believe they're getting a lot more for their money than they actually are. Do you have any thoughts about that?
Yeah, I think that we're going to see this illusion be exposed, that a lot of companies were wasting a lot of money on these platforms, thinking that they were getting something that they didn't. And so, no, I completely agree. And I think you recently, I can't remember the specific tweet, but you had a great example in the advertising space from the FT of an organization that, to me, perfectly captured sort of that Japanese real estate moment with online advertisers. That sense that this small startup was suddenly worth more than all of the established incumbents. And that to me was just a huge warning sign.
Yeah. Well, you do such a great job of pointing out those kind of sentiment signals to me. I mean, I'm reading a bunch of this stuff and tweeting it, but I love the metaphor with Japan. For those who aren't familiar, in the late 80s to 1990, the Japanese real estate market, went berserk. Stock market went berserk. And, the stock market still is 30% below that peak it set in 1990. But the mindset that was surrounding that real estate boom is fascinating, and it does echo in some things that we're seeing. I have to now ask you, I mean, because you've been on top of this more than anybody else, is tracking and bringing to my attention what's going on in the world of SPACs. What is it about the popularity of SPACs that is so, I guess, meaningful to you in terms of social mood?
So let's start with what they're called: blank check companies. So you just stop and think about the wording and what that says about confidence, that we're prepared to give someone a blank check, and not insignificant blank checks. And then you look at everybody who's created one. We've had the usual suspects from finance, but then we had this wave of sports celebrities, political figures. I joke that SPACs became this sort of vanity license plate that, if you could have one, you did. And then you look at what did they put their money into, EVs and space. And so both of those representing this new frontier mindset. And so to me, it is just such a magical coming together of mania upon mania upon mania. It's sort of this fantasy cube of sentiment. And so it just became a question of, when is this going to just exhaust from a speculative perspective? And it's wild. You talk about Google Trends showing you when the top was. It's the first week of October. SPACs spoke. It's done. And the challenge with those is those sorts of frenzies is they never come back the way they did.
Yeah, and to me, it's the SPACs are, you kind of pointed this out, the intersection of illusion in the financial markets paired with influencers, right? Because you're getting, the only way you're going to write a blank check is to somebody who's influential enough to command that type of confidence.
Yeah, I don't think we've ever monetized celebrity status as well as we did with SPACs.
And to me, in terms of these market signals that you look at, I look at SPACs and the popularity of SPACs, which is totally unprecedented. One of my favorite things that you've written is you look at the chart of SPAC volumes per year, and we're going to look, a few years from now, we're going to look back, and it's going to look like a middle finger on the chart. I think that's just the perfect way to think about this. So what is it about SPACs, or is there some type of like a magazine cover type of indicator thing where you look at SPACs and say, hey, this is just about as euphoric as sentiment gets?
So there are only, I think things come out to play at different levels of confidence. That we are interested at different investments, different products, only at a particular level of mood. I don't think people think enough about what I call confidence elasticity and how demand changes with confidence. And so when I look at SPACs, they are a product where demand comes out only when the air is rarefied, only when the party it's 2 a.m. in the morning and everybody's drunk. So there's a timing element to SPACs that I think is really valuable in its expression of sentiment. That these things only happen at particular times. And so that to me is the greatest value of SPACs is this is telling us it's 2 a.m. in the morning and everybody has had way too much to drink.
Well, and you look back at the 2000 mania, the last time we saw IPOs go really berserk, and, people were willing to invest in, anything with a .com on it, and eyeballs. And that was just a sign. It didn't, no profits, no problem. Today, it seems like the SPAC craze is even more of a euphoric sign than that, because people are giving their money. We don't even care what you do with it.
No,
it's not. Go ahead.
Go ahead. No, and it has the other similarity of 2000, where you're seeing the grown adults in the room capitulate. So when the head of Disney's theme park says, "I'm going to go work for Virgin Galactic instead," to me is a great indicator that even the adults have to play. The guys that should know better. It's like, come on.
Right. They can't. Well, when they can't resist, it's reminiscent of, a lot of those things we saw. Was it, AOL Time Warner merger, which kind of marked the peak of the .com mania.
My favorite is George Shashin, going from the head of Accenture to be the CEO of Pets.com, not Pets.com, Webvan.
Right. Yeah, I mean, when you can't resist, we saw it with GM and their partnership with was it with Nikola?
Yes.
They just can't resist taking part. I want to ask you too. I mean, I guess similar to this SPAC craze, we've seen a craze in call options buying, and I'm really curious to know how this just huge move towards speculative trading on the part of people who've never had an interest in the markets before. How does that fit in with where we are in terms of social mood and this movement?
So first of all, I have to give you enormous credit for really bringing all of that to my attention. You, sooner and better than anybody I know, has shown a light into that activity, and more important, its impact on market prices, just incredibly valuable to me. But if we think about the progression of investing in terms of inherent leverage and risk taking, call options are all downside with upside, the asymmetric risk to them. And so they're to me an indication of speculative fever, where I am buying because I am so certain price is going to go up that I'm now looking to do that with as much leverage as I possibly can. And so I, as a retail investor, buying stocks is boring. The real money is in call options, and that we're seeing so many, and honestly seeing big institutional folks playing the same game speaks to a broader speculative frenzy than I think the marketplace overall is really aware of. And as you've pointed out, their ability to move price is staggering. And so you see, from a chart perspective, this archipelago of accelerating mania. Recently, we saw that in lumber late this summer, where the gaps every day just kept growing, and that is saying to me that momentum, that the inherent energy in this trade is moving to climax, and it's just a question of when does it exhaust. But I really see that today with all of this call option buying. And I worry that that the challenge with it is once price turns, the evisceration is extraordinary, and that asymmetry of risk becomes devastating to those that are getting it at this point.
Yeah, and it seems to me, that the speculative euphoria is more extreme probably than I've ever seen. In terms of the call options and SPACs. To me, I have to mention, Davey Day Trader, because I do think he represents the intersection of this illusionist, visionary paired with influencer. Right. I mean, he might be the perfect example of these two things coming together.
Yeah, he's a human Venn diagram of all of us.
Absolutely. So with all of this kind of speculative fervor, clearly, I want to try and relate this to the K-shaped recovery, because I'm curious to know where you think we are in terms of confidence at both ends of the K. It seems like confidence at the top of the K is off the charts. But confidence on that lower end of the K, which seems to be getting forgotten in a lot of circles, is at an extreme low. Do you see those converging over the next however long in the quarters?
Yeah, so I think of America as being the home of the invincible and the home of the hopeless. That we've gutted the middle, and you've either ridden an extraordinarily wave up, or you've been taken down by the other side of that wave. As I look at everything today, Jesse, I feel like we are in a partial rebound state in aggregate. And so the question becomes, can we elevate those at the bottom up? Does the generosity of those at the top extend back into the bottom? Do we see jobs come back? Do we see political concern for those who have less than? Because I think that for those at the top to survive this, we're going to have to do something for those at the bottom. The gap is too broad. The risk is that doesn't happen, that the recovery that is underway fails to now accelerate. And I know, sitting here on Monday, November 9th, that's hard to imagine, given all of the good news that investors have priced in post the election. But I really am concerned that this K-shaped recovery now runs the risk of turning into a lower shaped H, and the euphoria faces a reconciliation with reality. And God help us if this recovery were to now stumble, because the underlying anger, the underlying hopelessness that exists, that honestly to me was expressed in this election, that seems to be invisible to people. There's going to be outrage, because that's the only way people will be able to adequately express the sense of hopelessness that they now feel. And again, it's on the right and the left. This is not a partisan pitch.
Yeah, I'm curious to know too. It does seem like the top of the K, is probably due for a confidence reset, or at least a reversion. Do you see the bottom of the K in terms of confidence bottoming out anytime soon, or not in terms of the economy, but in terms of their sense of hopelessness?
In terms of it bottoming,
Yeah, I mean, because I'm just thinking of a tweet that you shared a couple of weeks ago. I think we've seen several different media outlets suggest, here is the way to combat that sense of hopelessness, and it does, seem darkest before the dawn for a lot of people, I guess. Can maybe try and take hope in that. Is there any? It would also seem natural to me that if the top of the K is going to see some reversion, the bottom should see some as well.
Yeah, I mean, I would like to say that I've seen the bottom. I think there would be some who would say that the George Floyd protests marked the bottom for those on the left. But I worry honestly about how those who feel defeated by what happened in the election last week, how we haven't yet seen any manifestation of that sense of hopelessness. And so, I hate to be looking for trouble, but I need the passage of time to be able to know that we have gotten through this gracefully, and that amid all of the anger on both sides, that we can come together with common ground. That would give me the greatest sense that those on the bottom have hit the low, that their confidence is rising.
You're absolutely right. I think you probably do need to see how we get through this. I timed this interview because I thought, who would I want to talk to understand, what the election means and how we can think of it going forward. But it is still a little bit too soon to try and draw any broad conclusions. I do think you're absolutely right to think that there is probably some sort of fallout related to that sense of the hopelessness for a lot of people who on the other side of the election there. I want to change up. I've taken up a ton of your time, Peter, and it's been super valuable to me. But I want to finish with something might sound a little bit off topic, but you are a teacher. That's evident to me in your writing, and your teaching through your writing has been extremely valuable to me. How does teaching, or even just thinking of yourself as a teacher, help you to synthesize ideas, or just even be a more effective socionomist, if that's the right term?
One of the things that I've learned having to hold attention for an hour and a half twice a week is that stories matter more than facts, that metaphors, analogies, taking complexity and simplifying it is vital to being heard. It sounds clunky and cumbersome now, but the first label that I put on the K-shaped recovery was the work from home confidence divide. And my God, does that just doesn't sell. That doesn't work. That doesn't resonate. And so I feel as a teacher that if I can frame things in a way that my students can understand them, they're going to learn a whole lot more from me than if I demand that they come to where I am. And I love trying to figure out how to make something easier for people to understand. I would also say that I learn so much from my students. A topic, I never plan the class more than conceptually what it is that I want to get covered. And I learned so much by letting the conversation flow based on their questions, based on their inputs. A student will say something that leads us down a rabbit hole where I will uncover something that is so cool and clear that I never thought of before. That we communicate through adjectives, for example. Hot tells us a whole lot more than 90 degrees outside. And then the last thing, Jesse, is I am humbled by my students' optimism. Nothing makes me more hopeful about the future than being in a room with 18 to 21-year-olds week after week after week. I don't know where we go from here, but I am excited by what I see in terms of their resilience. I mean, this is a generation of young people who've been through crisis after crisis. Uncertainty is their normal. And I think that resilience has yet to play out on a bigger stage. So I'm really excited by what they will bring to our future.
Well, that's just the perfect message to leave it on. Before I let you go, I have to ask, or I guess let the audience know where they can keep up with you and your ideas.
So they can find me at peteratwater.com, which is my website. My commentaries that I publish, the research that I offer for investors comes from financialinsights.com, with insights spelled INSYGHTS.
And I really recommend everybody follow Peter on Twitter, Peter Atwater. And he's one of the most valuable Twitter accounts that I follow, totally underfollowed. It's amazing to me that Peter doesn't have hundreds of thousands of followers, because whenever there's a big story of the day, it's your Twitter account that I look to for analysis and understanding. So, Peter, thank you so much for taking the time to do this. This has been super valuable to me. I know the audience will get a ton out of it. So just thank you for taking the time.
I really appreciate the opportunity, Jesse, to catch up. It's been great.
And that does it for another episode of Super Investors and the Art of Worldly Wisdom. As always, you can find notes and links related to this episode at thefelderreport.com. Thank you for listening, and until next time, buy low, sell high.
Man looks in the abyss. There's nothing staring back at him. At that moment, man finds his character. And that is what keeps him out of the abyss.